Welcome to the Fear and Greed Business News Afternoon Report for Thursday, the 15th of August, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed up 0.2% today to 7,866 points. Among the large caps that weren't reporting, the big miners were lower on the back of weakening iron ore prices. REA and Santos also underperformed. Westpac and ANZ led the big banks higher, while Wesfarmers was another strong performer. Investment group Magellan's share price surged 8% after it increased its profit and said it had taken a stake in fund manager Vinva. Mining contractor NRW Holdings share price jumped 9% after it announced a 19% increase in profit last financial year and lifted its dividend. Shares in agribusiness Nufarm tumbled 10% after downgrading its earnings outlook due to reduced confidence that the industry environment will improve for the remainder of this year. And West Australian lithium producer Pilbara Minerals has made a $560 million takeover bid for Latin Resources and its projects in South America. Pilbara's share price fell 5%. Story number 2, Penfolds owner Treasury Wine Estates today announced a sharp fall in earnings after writing off the value of some of its cheaper wine brands, but it did increase its final dividend. Treasury had already announced the decision to offload a bunch of brands, including Wolf Blass, Yellow Glen and Lindemans, to concentrate on the higher end of winemaking. The group will combine its Treasury Premium Brands business with its Treasury Americas Premium Brands portfolio next year, creating a division including 19 Crimes, Matua, Squealing Pig, Wins and Pepperjack. Penfolds will remain as a separate division. About 75% of the company's overall profit comes from the Penfolds business and a luxury wine portfolio in the United States. The bottom line was a 61% drop in profit to $99 million thanks to that big impairment that was worth about $318 million. The impairment. The Treasury share price ended 1.4% higher today. Story number 3, Origin Energy share price tumbled nearly 10% today despite a 30% rise in profit after the result and the outlook for this financial year were weaker than expected. Chief Executive Frank Calabria flagged that profits in energy markets, which includes generation, retail and trading, would slide in the coming year, echoing a similar warning from AGL Energy yesterday. Origin's profit for the 2024 financial year jumped 32%, to be exact, to $1.4 billion. On the back of much higher earnings in the energy generation and retailing businesses. The stock closed at $9.60 today, which is still above the $9.39 offered by Brookfield and EIG in a $20 billion takeover bid rejected late last year. Story number 4, hearing implant group Cochlear posted a 19% jump in profits for the last financial year, but the result was considered a miss and its share price tumbled 7%. The group said it expected implant trading conditions to remain strong with improving growth rates in developed countries. Chief Executive Dig Howitt told The Australian that digital savvy seniors and an expanding body of research on the benefits of hearing to cognition underpin Cochlear's long-term growth trajectory. He said hearing loss is undertreated and there's enormous potential for cochlear implants to change people's lives through better hearing, particularly for adults and seniors. His strategy is to raise awareness, having people referred and making sure health systems have capacity and funding to meet demand. And finally, story number 5, iron ore prices have dropped to a 21-month low as figures show that China's steel production in July fell 9% month on month. Singapore iron ore futures hit as low as $93.70 US a tonne. It comes after the chairman of Baowu Steel Group warned that China's steel industry faces a crisis worse than the downturns of 2008 and 2015. Now, Baowu is the world's biggest steel maker, needs lots of iron ore, which we produce. It isn't much better in the rest of the world's second largest economies. Figures released today show that sluggish confidence is weighing on consumption and investment in China, putting the government's annual growth target at risk. In contrast, there was good news out of Japan today, the world's third largest economy and an important trading partner of Australia. Japan's economy rebounded to growth in the second quarter on the back of an increase in private consumption. GDP expanded at an annualised pace of 3.1% in the 3 months through June. That's it for the afternoon report for Thursday, the 15th of August, 2024. Michael Thompson and I will be back tomorrow morning with the Friday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.